Welcome and thank you for being here. Get excited. We're about to begin. Again, welcome. Thank you again for being here. I'm Melissa Harris from melissafunds.com, and I am the author of Almost Home, 10 Key Steps to Home Ownership. I'm also a loan officer and a real estate agent and so much more. But today we're going to focus on the 10 key steps to home ownership from a real estate agent and a loan officer point of view. I have a little over 20 years experience. So I hope you find this informative and helpful. It's going to be short, sweet, and somewhat complete. You want to get the ebook because it has a little bit more information. And it's just a great guide to have handy so that you can refer back to it as often as you like. So speaking of which, you need to go to my website, melissafunds.com. After watching this video, mention the video on YouTube, and I will send you a free ebook, either in Kindle format or PDF format, whichever you choose. Please make sure you specify that when you contact me through the website. You'll also be able to keep up with all of my exciting events and products and see all the things that I offer and any future creations. I'd love to connect with you. So thank you again. And don't forget to like, comment, and share on this video. It really helps me out and it won't cost you a dime. And I know you've heard a lot of the same information, but you ain't heard it from me. So that said, let's get to stepping, y'all. All right, we're ready for step number 1. Well, you turned on this video. That's kind of step number 0, but here's step number 1. You want to do your research. Watch videos like this. Google information. Ask friends, family, and strangers. Attend workshops. Speak to real estate professionals like moi. And take notes and make a plan. And then after you've done all of that and you're satisfied with whatever you've learned, you're ready for step number 2. You want to monitor your credit and save, guys. Get a copy of your credit report, look it over, make sure you know where you stand credit-wise. Review and nurture your credit. Save, save, save. If you don't have money saved, lenders will call it reserves. They like to see at least 3 months reserves, which means 2 or 3 months, should say, of mortgage payments. Whatever your mortgage payment's going to be, if it's going to be $1,500 a month, you want 1,500 times 3. That's been sitting in a savings for a while. They want to see that your money is seasoned and that you have good saving ethics. So keep that in mind. Next, you want to organize your assets. Know your net worth. And that helps a lot. Know where you stand as far as how much you're going to put down, how much you're going to keep in reserves. And you always want to have like an emergency fund, which is kind of like your reserves, the same thing. And then you want to organize all of your documents, tax returns, pay stubs, your statements, your bank statements, credit card statements. The lender's going to ask you for quite a bit of documents, but I personally, as a loan officer, I give you kind of a soft approach because it can be a little bit overwhelming. So I hold your hand and walk you through the entire process. So please feel free to reach out to me through the website. Just go to melissafunds.com and click contact us, and I'll be happy to respond. Next, you want to organize your life. Mostly I'm talking mentally. You want to be in a good mental space and say, hey, I'm ready for this. I've got everything together. I'm ready mentally, because it can be quite an emotional and mental process. It's a big deal. It's like buying a car. You know, you're going to be driving that car every day, several hours a day, maybe if you're a commuter to and from work. You're going to be going on trips, whatever. You're going to be spending a lot of time in this house. So you want to make sure that you're in a good mental space and that you are ready. And that's one of the main purposes of me doing this ebook, so that you know that you are ready. It helps you kind of encourage and get you ready. You also want to schedule your credit and saving reviews, meaning Once a month, I like to check my credit report just to make sure there's nothing on there that shouldn't be on there, or make sure that I'm keeping track of my credit and my spending and my debt. You want to really keep a close, because the higher your debt, the higher your interest rate is going to be. I have loans just for about any type of class of people where you have high debt, low debt, whatever, but there are debt ratios. If you want a conventional loan with a really good rate, you want to have a really good credit score, and you want to have as low of a debt ratio as possible. Lenders don't want to know that you are in high debt, because then you're considered more of what we call a quote unquote risk. And so this will keep you on track by monitoring your credit and by monitoring your savings, etc. And then you're pretty much ready for step number 3. This video does not include the secrets that are in the ebook, so there is a lot more detailed information in the ebook. I think you should get it and read all through it. It's very simple, easy to understand. If there's anything that you have questions on, I'm available to answer your questions. Just give me about 48 hours to respond. Now, step number 3, you want to get pre-approved. You want to be ready, willing, and able. And this is where we come back to the mental and emotional part of buying a home. You want to know what the difference is between a pre-qualification and a pre-approval. So pre-qualification is basically, you come to me, you tell me your scenario. This is how much I make. This is how much I owe. This is how much I have saved. And I'll say, yeah, you're pre-qualified. That doesn't carry as much weight as a pre-approval. When you meet with your real estate agent, you want to have a pre-approval letter from the lender that shows that you are a real buyer, that you are really ready to buy a home, and you're very serious because you've gone through the process of being pre-approved by having your credit run, pretty much counseling. I counsel people, some lenders don't, where they just take your application, give you a pre-approval letter, and send you on your way. I go the extra mile. I will give you a handout. It's called do's and don'ts when you're buying a home. Now, there are things that you want to do when you're ready to buy a home, and there's things that you don't want to do. Like, you don't want to buy a car. That will raise your debt ratio. You don't want to do that. So you want to make sure that you get that handout. You want to make sure you understand the rate lock terms, as far as when you get pre-approved, they'll lock in a rate. Say you get a really good rate and you want to lock that rate in. So there's only a certain period of time that the rate locks are good for. It depends on the lender. So make sure you know how long your rate lock is good for, because you would need to pick a home within that time frame. Otherwise, the rate becomes unlocked after a certain period of time. Then you're back at the market rate. And I have never heard of anybody relocking a rate. You can always lock it again, but it's not going to be, if you got a low rate and were locked in at a low rate, and then you don't find a house within that time frame, usually it's 25 to 30 days, then the rate becomes unlocked, and then you're at whatever the market is, and hopefully it'll be lower. Who knows? The rates go up and down. Things are changing every single day in this business. Very somewhat unpredictable. If you're a renter, you want to understand that you typically would give your 30-day notice once you get into contract, understanding that your first payment is going to be due in about 60 days from the time you get into contract, because your first payment is included in your down payment and whatever you're putting down for your home. So keep that in mind. You also want to be sure, again, to check out the secrets in my ebook. There are things that professionals know behind the scenes, and the hard work that they do, that they wish the buyers would know and understand, but some of them just don't want to share it. So I'm sharing some of those secrets in the ebook, actually most of them, things that are really key and important for you to understand as a buyer. So you have more, I guess, what do you call it? More knowledge about what you're doing and what's going on behind the scenes. Now you're ready for step number 4. You want to get a good sales agent. First, you need to understand there is the only difference between a realtor and a sales agent is being on the board of realtors and paying the humongous fee that you pay per year to be a realtor with a trademark. Realtors and sales agents are held to the same standards, the same laws, and they have the same educational requirements. So don't misunderstand when you hear the advertising. They advertise, basically, there's an advertisement saying that realtors are better than sales agents. This is totally untrue. It comes down really to the person. If you know a sales agent that doesn't have the realtor trademark behind their name and they want to work with you, they can easily join the board for that period of time to help you. And anytime they want to, they can join the board. And then when they're done, they can always put themselves inactive as a sales agent. I primarily do loans. So currently, I don't pay the dues because it's like $1,700 a year or something like that. And why should I pay that if I'm not actively working with buyers? So if I want to sell a home, then or work with a buyer, I would just simply make my license active by joining the board and that kind of thing. But I'm still qualified. I can still work with people as a sales agent. I just choose to do loans. Mortgages are really my passion, but I can sell homes. It's just buyers, I don't have a whole lot of time because of my loan business. You also want to get your pre-approval over to your sales agent so they also know that you're very serious, because understand this is their job, and for many of them it's their primary source of income, and they have to support their families too. So they want to make sure that time is, you understand time is money and money is time, and not in a lot of people that I know have a whole lot of either. So an agent wants to know that you are qualified before they begin spending time pulling listings, meeting you in person, taking you to open houses, working behind the scenes, writing contracts, joining the board, and that kind of thing. So you want to make sure that you present them with your pre-approval. That way they also know what price frame they're supposed to look in for you, and make sure that they're not getting you homes that are above what you're pre-approved for. So then you want to set up a time to meet in person, which would probably, typically it's at your first open house. They pick out some listings and then you guys set up a time and a place to meet in person. And then you want to get like 10 of their business cards. So that way, if you're ever driving around the neighborhood on a Saturday and you didn't have an appointment with your agent, you're armed with their business cards. So other agents can't try to steal you away or anything like that, because they will. And we work very similar format to attorneys. For instance, if you have an attorney representing you in a case, you're not going to deal with the client directly. You are going to have your attorney speak with their attorney. And that's pretty much how sales agents work. You are not going to have 2 or 3 sales agents representing you in buying your home, because we all have access to the same exact information. So keep that in mind. We want you to be loyal and committed, because once we connect with you and we feel like it's a good fit and everything looks like a go, we are going to be very loyal and committed, because remember, this is our job. We work for you, even though the seller's agent is the one that's going to be paying us. You don't pay us a dime. You pay your loan officer, which is me, but the sales agent, you don't pay them. Typically the seller pays the sales agent, the seller's agent, and the buyer's agent. So after you understand all of that, you're ready for step 5. This is the exciting part, y'all. It's time to find your home. You want to search for listings. You want to share them with your agent. The agent should be sending you listings as well. You want to set up a time to view homes, go to open homes, or you can even just visit vacant homes that are not having open houses. When you go to open houses, don't forget your business cards. I usually leave them in my car so that I'm armed with them at all times in case that agent approaches you and asks you, can they work with you? And you kick your agent out, which is not being loyal and committed. So if you have a problem or you have something that you're not happy with, just discuss it with your agent. They will totally understand. They'll make adjustments as necessary. If it doesn't work out and you guys decide to part ways, just communicate with them, because we're all adults. And I think it's only fair to let them know and be honest with them, rather than them not hearing from you and next thing you know, you're closing a home with some other agent. It's just doesn't feel very good. Next, you want to understand how new home construction works. If your agent sends you to a new home construction site, sometimes they will try to make you understand or make you believe that they have their own agents and their own loan officers and they don't work with outside people, to see what your reaction is. If you say, hey, my agent sent me here and she should be paid commission for sending me here, then oftentimes they will conform. They'll say, okay, we'll work with your agent, because remember, the bottom line is moving the property. So understand that. If you have a question or a problem about that, don't be afraid to say, excuse me for a minute, let me go outside, let me call my agent. Call your agent, let them know what's up. Now, once you've had looked at several homes, some people find their home quickly, some slowly, you come down to the process of elimination. What is your favorite home? Which one do you want to make an offer on? And select your home. And then you are ready for step number 6. You want your agent, you're going to present your offer. Now, what is an offer? An offer is basically a half ratified contract, which means it's not signed by all properties or all persons, all parties. You are going to make this offer to the seller. You're going to give them a copy of the earnest money deposit showing that you're serious about buying this home. You are going to also have an offer letter with it. Your agent can help you put the letter together if necessary. You definitely want to show your pre-approval letter that you are qualified for this particular home from your lender, carries tons of weight. And then you may get to a point of a counter offer. The seller may counter your offer. Like they may ask you for more money, or they may request that the appliances not be included, or whatever the case may be. There may be a counter offer. Sometimes there's not a counter offer. If your agent is really good and writes super clean offers, then oftentimes there's no counter offer, but sometimes there is a counter offer. It just depends. Also based on any disclosures that the seller has shown you prior to your even writing an offer. Then you will come to the point of acceptance. So once the seller says, hey, this is a good offer, I'm going to go ahead and accept it. They've accepted the counter offer, everything's good, everything's ratified. They'll send you a signed offer, which is now ratified, fully executed. You'll hear these terms. And now you have the green light to open escrow. And so the seller typically picks the escrow company. The buyer picks typically, it depends on where you're at. And by the way, I do loans in just about every state of the United States. So if you know people in different states, you can also have them visit melissafunds.com. I work with a ton of lenders. I literally work for a bank and a mortgage broker. So I have access to a lot of the top lenders out there. Now you are ready for step 7. This is where it gets serious, or more serious. I'm not saying the process in and of itself, the whole process is serious, but this is where it really comes down to the wire, where you will hear the term, time is of the essence. So, because you have a 21-day contingency period. And again, it depends on where you are. In California, typically, the contingency period is 21 days. Now, what that means is you have 21 days to back out. You have 21 days to do all your inspections, review everything, and then go forward. If you go past the 21 days and say after 21 days you decide you don't want to buy this home, you will lose your deposit. So I don't want you to lose your deposit. Your agent and your loan officer should totally be on you about, let's review these inspections. This is not a time to drag your feet. This is time to move, because the seller is also waiting. They've taken their home off the market for you. So you want to have a home inspection. That is so important and crucial. A home inspector can go through the entire home. They can tell you if they've noticed termites, or if they've noticed some issues with the roof, or if they've noticed some structural problems, or if there's problems with the plumbing. The home inspection is kind of like, that's the beginning golden start. If they say there may be some termites, then you'll have a termite inspection. They're not termite inspectors, they're home inspectors. If they notice termites, they can't go into what the damage is and the extent of it. A termite inspector, on the other hand, can give you more details. So you want to have a termite inspection for sure. Make sure that the bones of the house are not being eaten up by termites. Then you want to have a roof inspection, unless you have a roof disclosure or some sort of a invoice receipt from the seller showing that this roof is about 5 or 10 years old. We know, everybody knows roofs typically last about 20 to 25 years. So if there is an issue that you see or the home inspector recommends a roof inspection, get a roof inspection unless the seller has given you disclosures about the roof or even the termites. They might even have that too. An appraisal inspection, that's actually something that is absolutely required. I don't believe, as a lender, we don't waive that. You have to have an appraisal. Depending on the type of loan that you get, sometimes the lender will have a third party appraiser come and do the appraisal because of all the fraud that happened in 2008 when the market crashed, if any of you remember that. But you want to definitely have an appraisal, whether you're paying cash or not. You want to know that you're buying a home and the value of the home is within the means of what you're paying for the home. And if you're going with the equity, all the better. You want to have a structural inspection if necessary. Sometimes these are not necessary. There, you may notice some buckling on the house. For instance, if a house is leaning or if it's bulging from one side, you may want to have a structural inspection, and a home inspector should be able to detect that as well. And if you go through all the inspections and you see something that you might want the seller to cover, or if you agree to cover something, you may want to add an addendum to your contract, because now that the contract is fully executed, there's no more countering. Now you're at the addendum part if necessary. Sometimes not, sometimes it just depends on the situation. Trust me, I've sold many homes and I've done loans on many homes, and pretty much every situation is different and unique, but the principles stay the same. And after you've gone through all of that, ladies and gentlemen, we are ready to move on to step number 8. It's time to deal or dash. This is where you will review your inspections with your agent. You want to review your disclosures. You want to discuss any questions or concerns with your agent. You, once you have an acceptance, you want to give your 30-day notice. If you're going to go forward with the house, you're going to deal, also known as close, or you're going to dash. You're going to walk away, or shown in the picture, the guy's running away. So don't lose your EMD, your earnest money deposit. That's the whole point, and the time thing. This is definitely a time, and the time goes very quickly. It goes very quickly. So I always tell people, act like you're getting ready to move. Once you've picked your home and you've gotten into contract, you want to start packing. Get your stuff together, give your 30 days notice. Don't lose your deposit. Let's go forward. Otherwise, you will get a notice. The buyer will sometimes send what they call a notice to perform if things are not happening in a timely manner as they should, because they don't want you to lose your deposit either. Even though they'd be happy to keep it if necessary, but we try to help you avoid that. And now you're ready for step number 9. You want to check in with your lender. Contact your loan officer. Do a loan estimate review. You want to submit any more documents that the lender is asking for. Sometimes they ask for updated pay stubs. If 30 days have gone past, every 30 days, they would like fresh pay stubs. Make sure you haven't quit your job. Make sure you haven't drained any money. Make sure you haven't bought any big ticket items like a car or a boat, or something like that, which is a total no-no. Anything that's going to affect your debt ratio, you don't want to do that while you're buying a home. This is a very sensitive and critical time. Any other conditions that the lender is asking for, the seller is requesting, you want to take care of all of that. Now you want to check in with escrow, or have your agent check in with escrow. Make sure the title is clear and we're clear for takeoff. Sometimes, unfortunately, clouds come up on the title. There may be a lien that the seller has on the home. They have to figure out how they're going to clear this lien, and usually it's due to the sale of the home. So once the home is sold, they understand that the lien will be paid off, and make sure there's no tax issues on the home. And if there are, who's going to settle the taxes? Are you and the seller going to split the taxes, or how that's going to work? Again, it depends typically on the county, even though in the state of California, it doesn't work all the same in all counties. Some counties have different requirements as to who pays what, but your agent, again, should be able to walk you through that. You want to make sure you have your insurance in place. The escrow company usually typically takes care of that, but you want to make sure that you have confirmed that is confirmed. And make sure if you have any mortgage payments, your mortgage payments, what they're going to be, make sure you're clear on that. So there's no surprises. I have seen people get up and walk away from the signing table because the lender did not share with them exactly what their mortgage payments are going to be. You want to be clear on that. As a buyer, it's very important. You're going to have principal, interest, taxes, and insurance. We call it PITI. And we want to make sure you understand what your principal, interest, taxes, and insurance are going to be. Usually taxes and insurance are kind of paid separately, but it's all calculated out on your loan estimate review. And also the title company, the title officer, and the loan officer should be able to break that down for you as well. And now you're ready to move on to the final step, guys. Number 10, it's closing time. Yes, 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 yes. You are almost home, which is why I named this Almost Home. I love this. You want to remain calm and breathe like I'm doing now. You want to review, review, review. Just go over everything. Find that happy center and just review and remain calm and breathe. Those are the most important things at this point. You're going to prepare for your signing day. And when I say prepare for signing day, you want to make sure all your ducks are in a row. You've had a good dinner, you've had a good night's sleep, and you're ready to go and sign, because the signing can be a little bit intense. I mean, you're signing a little bit over 100 pieces of paper, I believe it is nowadays. And it takes about an hour or so. It just depends on the type of signer that you are. Are you somebody who is going to stop and ask questions on every single thing? Now, whoever the escrow title officer is should be able to explain all the boldface things to you. The other parts, the small prints and the non-boldface items, are things that you want to save for those days when you're having a little bit of insomnia. Okay. You will definitely not have any more sleeping problems by reading all the fine print, but they will explain to you the main stuff that you're signing, and it will be clear and true. And after that, you have what we call funding. After everything is signed, goes back to the lender. The lender then funds the loan, meaning they cut the check to the title company for the home, and then the title company will disperse the separate checks to whoever is on your closing disclosure. Now, after all of that is done, then your home funding and recording are typically can all kind of be done in the same day. It just depends on the time of day. There is a cutoff time. Usually it's 12 noon. And if you sign, say at 9 in the morning, you can probably fund and close the same day. It just depends on the lender, and also, again, the time of day. There is a cutoff time because all the funds have to be wired and dispersed. So you fund, the bank sends the check, the title company starts cutting the checks while they're waiting for the recording. The recording is done at the county records office. And that's why it's called recording, because it's county records, where your name is now on title. The old seller's name drops off, your name, you are the new owner of this home. And once you are on title, then that is, you're clear to close. It is closed. You are now the new homeowner, and you have done a great job. So pat yourself on the back. Congratulations and welcome home. This is the final. You're going to meet with your agent at your new home. You do your final walkthrough to make sure nothing in the home has changed. No walls have been bashed in, or things that you may not have noticed when you did your first viewing. Because sometimes, these houses are staged. A lot of the homes are staged. Certain things you may not have noticed because the furniture was in the way or whatever. But that's why you get the home inspection as well, because the home inspector will check every single corner of that home. But you want to also make sure that you do your visual and your due diligence in making sure that everything is still in order, and they haven't taken, like, the kitchen sink or the light fixtures or something that was agreed that was going to be in the contract all of a sudden is not there. That's the purpose for the final walkthrough. And once everything is satisfactory, you will be handed your keys. So congratulations once again and welcome home. I want to thank you all again so much for being here. You have a question and answer time. You can ask questions in the comments below. Also, actually, if the comments are turned off, you can contact me through melissafunds.com and send me any questions that you have. Make sure you contact me about your free ebook for watching this video. I thank you once again, and best wishes to you. I'm so looking forward to connecting with you. I hope this video really, really helped you. And I hope, again, that you like, comment, and share, share, share. It really, really helps. And it lets YouTube know that you found this material helpful and I can keep making them. All right. Take care, everybody. Stay blessed and enjoy your new home.